This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and the volatility has arrived on schedule as expected. Of course, it's FOMC week. We know that tomorrow, I believe, is the meeting. And we also know that we are, with 99.9% probability, going to remain paused at the Fed. So that's probably entirely baked into the cake. When we get to the TA section at the end, I want to show you something that I found with the half-cycle lows, because the half-cycle lows for the stock market are pointing down until Friday. So I think it's only reasonable to expect this week to resolve to a half-cycle low. But then the good thing about cycles is going into next week, we know that we can use the cycles to guide us. We should either come swinging out of that low and be bullish, and if we do not come swinging out of that low, that half-cycle low, into next week, then we know we're going to be heading for cycle failure. And again, cycle theory lets us know what that implies. So I'll show you that. I first of all wanted to take a quick kind of detour for the newer eyes that are coming onto the channel and into the space. I just want to make some people aware of a few details about trading that will stop you flying a flag that shows everyone you're a rookie in the space. So I want to talk about that. I'm going to show you a couple of Bitcoin setups, and then I'm going to show you some of the indicator updates that are coming, because what we have built, I am extremely proud of. So I'm really excited to show you exactly what is coming in the next major update for the indicator. In the meantime, we'll start by opening with a joke, okay? A budget hotel company now owns more Bitcoin than Coinbase, a company that was established when Bitcoin was just trading at $6. Of course, this budget hotel company is Metaplanet, and the same stack that Metaplanet has acquired for hundreds of millions, Coinbase could have bought for as little as 60k. So I know people are going to be asking me about this. Bob Lucas threw out this, and this was somewhat of an ace I was keeping up my sleeve, actually. I didn't expect anyone else to spot this. I probably should have known Bob would, but this is one possible scenario here in which we get this move up that runs late, okay, into early 2026, again, maybe into that February timeframe that keeps coming up more and more often of late. Then we get a relatively shallow decline, maybe only about 50%. And here's the key part. It doesn't really take a full 12 months as expected. It's actually slightly shorter. Then we have this big blow off move. As you can see, this is approximately 800k. I mean, of course, cycles predict time, not price. But this would align with that whole super cycle narrative. This would align with Jordan Lindsay's work that he does pertaining to how monetary policy doesn't really align for Bitcoin to actually run significantly until later in life. And that's why he keeps calling for the top to be closer to 2028. And of course, notice that this would be cycle 5, left translating extended bear market decline. Now, cycle theory tells us if we do actually overextend here, then we will come down sharper and faster. So if we get a major top sometime around month 35, sometime around September, October, November, whatever, then I think we can reasonably expect a full 12-month decline. But if this thing does overextend and runs into early next year, then I think this has to become the base case, because when cycles overextend, the drop into the cycle low tends to be sharper and faster. Overall, though, regardless of where the low forms, notice how left translation, at least for me, is still the base case for the next time around. So I think it's going to get pretty insane. I think monetary policy aligns quite well, as I said. That's what Jordan Lindsay covers extensively. And there's really nothing more for me to say about that, okay? I think if you've been following the work for a long time, you know that we're kind of operating with the assumption we're going to right translate now, 12-month bear market, and then left translate 3-year bear market thereafter. And of course, we'll have to maintain an openness if the cycle runs into early next year to have a shorter decline and a shorter bear market than we're used to seeing. But as I said right at the start, and I'm not picking on this guy, it's just a very easy example to use. As newer eyes come into the space, as newer eyes come into the channel, please make sure that you do the work, okay? You understand how trading actually works. You can see this comment here, right? Peter Brand mentions a possible double top here similar to November 21. With TA, you can predict any scenario you imagine, right? Dream on. Now, this is a very silly and inexperienced thing to say, purely because, as Bob points out here, we're not using this to predict anything, okay? It's all about trying to find asymmetric opportunities. This is where you can risk something small to make potentially something big. You can't fall in love with any setup. And here is the 2021 idea. Now, it's not a prediction, okay? Anyone that understands knows that this is just one possible outcome. There's no sense in trying to pretend like anybody knows what's going to happen. There's also no sense in trying to pretend like the downside scenario is not one possibility, right? This is absolutely a possibility, just as this is to the upside as well. And therefore, newer traders especially must not seek certainty in an inherently uncertain environment. You must be open to all possible outcomes. This is one of them, okay? Just like we saw back here. And the same exact TA can be interpreted in a bullish manner as well. So we saw, at least back here in March and April, okay, we came up, we made a base, we traded below it for a while, breakout, retest, resumption, led to a big push. What have we got? Run into resistance, we trade below it for a while, we run up, breakout, retest, possible resumption to the upside. So the whole idea, as I said, that we have to be open to the downside is still true, but we also have to be open to the upside as well. And I know this is one of the biggest challenges for newer traders and newer investors, and that is admitting that not only do you have no idea, but no one else does either. But without having that approach to markets, without understanding there is no possible way to know for sure which way this market is going to go, then you're forever going to be disappointed in what you see online and your trading experience. So just maintain that openness, okay? There's a reason we use stop losses in trading, and there's a reason we don't beat ourselves up when we're wrong, okay? As traders and investors, you're going to get things wrong all the time. That's not a problem. So long as when you're wrong in a small way, and when you're right in a larger way. I found this from MicroStrategy, and it kind of fits in this theme of like education for newer traders this morning, okay? This is absolutely the truth, that for every $1,000 rise in the price of Bitcoin, strategy or MicroStrategy will make $592 million. So with the rise yesterday from 105K to 107,800, strategy made about $1.6 billion. When Bitcoin hits 125K, strategy will have made $10.6 billion. And this is leading a lot of people to say things like, therefore, MicroStrategy has to make a new high. Okay, but again, fitting in with this theme of we have to be open to all possible outcomes, just because fundamentally it makes sense for strategy to make a new high, does not mean that it will make a new high. Okay, it doesn't mean that at all. And this could very easily blast off to new highs. Okay, happy days. And then we could look back at the fundamentals and say, well, that made sense. But if you're not open to all possible outcomes, okay, then you're going to get caught off guard by any price action like this, which would ultimately resolve to the downside. And if I go into my data window here and add the fractal from the last cycle, you can see that really, we would have seen this exact behavior before, okay, just in the prior 2021 cycle. That's where this fractal is copy and pasted from. So again, we must maintain the objective reality, which is we do not know what's going to happen. All we can do is take a position, size the stop, okay, and manage the risk on the way. I also wanted to point at this because I know this is the chart that my followers have the biggest amount of problem with. I've been showing Gert's work pretty much the entire time I've had the channel, and we've been creeping up here, and a lot of people say things like there is no possible way we could do such a move here for Bitcoin. But if I pull up this all-time price history chart for Bitcoin, okay, remember where we are in the major 4-year cycle. Right now, at the hard right edge, we are equivalent to this low from back here. We're also equivalent to this low from back here. We're also equivalent to this low from back here. And so in just a number of weeks, we're talking approximately 19-20 weeks, okay, we saw over 10x moves on the first cycle. The same is true here. In the prior cycle, in about 2017, in approximately 20 weeks, we saw over a 10x move. Here, this was the most lackluster, but in about 18 weeks, we saw about 100% move. And if from here, we're going to run all the way to October, then we still have 19 weeks of upside ahead. So a move of 100, 200, even 300% is certainly on the table. And if that's what we were to get, when we zoom out and look at the bigger picture, it still wouldn't look that insane, at least not to me, if it did something like this. So again, there's absolutely no way of knowing, but I certainly think people would do well to maintain that openness to all possible outcomes. Now, as I said at the start, I want to show you what is coming for this indicator, because we have gotten to a point now where I'm extremely proud of what we have built here. You will often on this channel see me use this indicator, and I have it stripped back like this, which just shows me the daily and the weekly cycles with the upcoming daily cycle low range. But it actually does a lot more than that, right? It shows you the cycle midpoints, it shows you the translation, it paints these green and red bars depending on whether the daily cycle was bullish or bearish. It can project future weekly cycle lows, future yearly cycle lows, and pick the major 4-year cycle lows like back here. So depending on your level or which preferences you have, you can put a whole heap of other details pertaining to cycle trading on here, whether that's to help you learn because you're newer to cycles or whether it's because you're interested in the cycle translation. It's entirely up to you. But this indicator is about to get a major update to it, and that's what I want to share with you today because I'm extremely proud of what is coming. So take a look at what is coming soon for the major update for this indicator. Okay, first of all, we've got labeling and the counts on the daily and the weekly cycle lows. We've got ticks to confirm whether these lows are in. We're also going to be adding a percentage probability of the low. So as we're approaching a new cycle low, it will give you a percentage, maybe 25% to say, I'm not very confident that this is going to end up confirming, or it will give you a 70% confidence or 75% perhaps if it thinks that it's extremely likely it's going to confirm. And then of course, once it's confirmed, it will tick it off. There's also this sine wave thing you can run in the middle, or you can turn that off if you want to. Again, you can strip it back and get rid of the translation, the colored boxes, the midpoints, whatever else you need. It will still project the future daily, weekly, and yearly cycle low ranges for you. And on top of that, it's now going to be adding in, as you can see in the top right here, CPI, PPI, unemployment, Fed funds rate, the 10-year yields, all of this, core PCE. So we're going to have the full macro data set here, which we can use in combination with this indicator. Oh yeah, the current indicator and this one is also going to give you alerts, real-time alerts for when a cycle low is in, so you can get a pinged email message or trading view alert for when a low is confirmed. You can also toggle on here confluence, and it will change this to let you know if it has confluence or not for the daily cycle low. And then here is the thing that we are most excited on. Now, this next thing is not coming for quite some time because we are going to continue to work on this. This is still a prototype, but we are also working on a top calling indicator here to tell you when the major highs for the cycles are in play. And so you can see that having something like this would literally change the game, right? This will allow you to trade the cycle lows. And if we can get this anywhere close to the accuracy that the lows have on the tops, then we literally have broken the matrix here. We have literally figured out how to buy low and sell high without having any skill requirement whatsoever. All we will need to do is manage the risk. So this is absolutely blowing my mind. This is why I wanted to share this with you today. Like I said, the cycle high indicator is not coming for a little while, but the first major update with all of these big changes is coming very, very soon. I'm just incredibly proud of what we have managed to achieve here in making something not only as powerful as this is, but also available to everyone. The feedback on the current indicator has been insane, right? People are saying that it works extremely well on all time frames. They've been back testing it and they've not had losing trades in a very long time for the first time and this kind of thing. So the feedback has already been extremely good, but believe me, when this one comes out, this is actually going to change the game. So I'm incredibly proud of what we've built. I just wanted to share this with you. We are going to continue to update on this thing. We're going to continue to put money back into it. We're going to continue to develop this until this is institutional grade. And I should also note that right here, right now, on the current pricing structure for the indicator, if you are paying either the flat rate at the moment or you've got some kind of discount code, you will get that price for life, okay? That price will always be applicable to you. You can use the discount code at the top of this banner here, claim 10% off for life, and even when we release this new indicator, you'll still be paying the same price. But just to let you guys know, once this major update comes out, we are going to be increasing the prices. So essentially, if you sign up today using the discount code, you're going to get a 60% discount for life for being an early adopter to this. And of course, you get all of the updates and stuff for free thereafter. So I did want to point that out to you guys. Thank you for all the people that are using it. Thank you for all the feedback we've had. Thank you for all of the support we've had. And we are getting ever closer to having something that is more powerful than any tool on TradingView. So I'm incredibly pleased with how this thing is working out. So moving into the charts, as I said earlier on in the episode, we have, as of today, got day 16. Now, it's funny that the half cycle low on day 20 is due to form somewhere between Friday and Tuesday next week. So I think it's only reasonable to expect any kind of volatility here to resolve slightly lower into the end of the week. But just keep in mind, the cycles give us that little piece of alpha here to say that that's normal and to be expected into a half cycle low. And then going into next week, so long as we can resume the uptrend, punch through all-time highs, happy days. But go into next week and start to see more and more downside, start to head down towards that cycle low failure, then we know that this indeed was just a counter trend rally, a lower high, and it's time to start to target new lows. So that's the beauty of cycles. We get to let them guide us. We don't have to worry too much. We don't have to do too much in the meantime. Just be aware that the half cycle low is due towards the end of the week, if not early next week. And thus, we can kind of say with a high degree of confidence that any kind of downside here is normal and to be expected into the end of the week and out of FOMC. For gold has changed its mind. The indicator's changed its mind. It doesn't want that day 16 low anymore, probably because it didn't have enough momentum to confirm as of yesterday. But that's good news because that means we are now back to the normal and to be expected cycle count, right? We're now right inside of that window, looking for a turn probably this week. And that's also good news because it means we don't have to worry too much about wonky counts or having to look for extended counts in the following daily cycle. Bitcoin so far, breakout, hard retest, resumption, another retest coming in here. I'm not really liking what I'm seeing out of Bitcoin at the moment, but as always, until cycle failure is observed, then we really don't have to worry too much. Interesting enough, Bitcoin's quarter cycle low is due Friday as well, telling us to be open perhaps to a little bit of red into the end of the week out of FOMC, as ever, chop games and volatility is expected during these FOMC weeks. And the biggest thing I'll be watching this week is the 10-year yield, okay? Is this the start of a downtrend? Is this the start of the resumption of tell that to the bond market? Is the 10-year yield going to start to move down and perform more easing than the Fed could ever dream of? Or is this the making of a higher low that will resolve to a higher high? Of course, the daily followers know if that's the case, then we'll have to put on some new scenarios. But again, as always, innocent until proven guilty. If this is what comes over the coming weeks, then happy days. I don't have to make any adjustments. And I still can say with confidence we're on the right side of the market. So, I'm your boy Camel. I hope you're doing well. Don't get chopped up this week, okay? Maintain that awareness of the cycles. Make sure you know that we're on our way down to that half cycle low. And I'll be back tomorrow, as always, with more daily content. Until then, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game.